December 4th, 2023. I want to start by saying I don't think this rally at the end of the day was worth trading. You could maybe buy above 72, a couple legs down. Thought maybe 67 was a credible sell, but the thing is, if you're going to take trades like that, once you get bad follow through on 68, you have to get out immediately on 69. You can see the traders who sold here were disappointed in this and just exited at the market essentially around their break-even price during 69. We ended up getting, this was strong enough for a second leg sideways down, and the tail on 70 was, that second leg. But I don't think this rally was all that worth trading because it's late in the day, and by bar 72, if you just look at this, first off, you almost never want to trade after bar 72, especially if the market's in a tight trading range because it's just usually not worth it. But we're in the middle of a tight trading range, and if you look on the daily chart, we've been in a tight trading range on the daily chart, and essentially the midpoint of that tight trading range was around 45.75, and we're oscillating. This whole tight trading range was oscillating essentially right between the open of the day, which is always a magnet, and 45.75. So we were in kind of an important area, oscillating between two magnets and just going sideways for 20 plus bars. So I don't really think it was worth buying above 72. You can make an argument it was worth buying above 73, but you're trying to buy breakouts late in the day at a tight trading range. The argument is that you're going to break out of the 18 bar range, right? 90% chance you're going to break out of the 18 bar range every day. And you can see we tried to the downside, but we failed and got the reversal up, and we tried to break out to the upside and failed. And so traders are thinking, well, this might be the start of a rally to that magnet, which is true. But I just think it's better practice not to trade in the middle of tight trading ranges because, well, this might make you money today. If this is reinforcing bad habits if you're buying in tight trading ranges, especially late in the day. So I think overall, just really not worth doing. Bar 1 was a strong bull bar closing on its high. After you get a big gap down and a strong bull bar closing on its high, it's pretty much, it's usually reasonable to buy above 1, hoping that you're going to get a bull trend from the open or at least get a couple legs sideways to up. But your first red flag should be that bar 2 was bad follow through. When you're getting bad follow through like that, you should look at where traders are buying, and you can see bulls were interested in buying about a 50% correction of bar 1. It didn't quite get to the 50% correction because bulls were eager to buy that down there because it was such a good bull bar and a reasonable buy setup. So they were pretty happy to buy the 50% correction. The bulls weren't really all that interested in buying above 1. So when bulls aren't interested in buying above 1, but they're interested in buying pullbacks, that should be your warning that this is probably more of a channel and we're probably not going to race up. And then you get bad follow through on 3, big tail on the top. So it kind of 2 and 3 is somewhat of a tight trading range, and you essentially get a failed breakout on 4, big tail on the top, and a micro double top on 5. So you now have a micro double top, and 1 was big enough to get a second leg, but 3 and 4 qualify as that second leg, and up on 3, down on 3, up on 4. So potentially its own 2-legged correction on a smaller time frame. So really not great to be long in here. I personally don't trade usually the first 5 bars a day. It's pretty rare, 5 or 6 bars at least. Just because I just used to do it all the time. Like I used to religiously buy. If we get a gap down on a bull bar, I'd religiously buy above this, put a stop below here, and just wait. I didn't really care what was happening. I would just hold. But it lost me a lot of money. So big follow through for the bears on bar 6. It's notable that 5, was probably a reasonable bar to buy below. It's not great, but it's not a great sell below 5 either. So when you get surprising follow through on 6, you got to be thinking we might have to get back to the 5 low. Can you sell 6? I think you can make an argument that you should sell 6, but the thing is, bears probably need one more bar. And if you're selling 6, you have to know you're probably going to get bad follow through. And then you get bad follow through, which is bar 7. Can you buy above 7? I don't think it's a great idea. If you think about it, have stop order bulls really made any money yet today? I don't really think so. If you bought above 1, the maximum amount of money you could have made was 3.5 points, essentially. Is buying above 1, risking 10 points to make 3.5 points an even remotely reasonable thing to do? No. So who made money? Well, limit order bulls made money. They bought the 50% pullback here, and they were able to make more than 5 points, almost 8 points. So I think limit order bulls are making money. And you can see that if you sold below 5 on 6, stop order bears were able to make 5 points. So stop order bears are making money. Limit order bears sold above 2, sell above 3. Limit order bears are making money. Stop order bears are making money. Limit order bulls are making money, but stop order bulls are yet to make money. And you generally just don't want to be the first trader to try and make money in a specific way on any day. Let someone else do that, and just wait. And if seven, if eight's good follow through, then you can buy above eight. It's still early in the day. You're not sure what's going to happen, and it could be a big bull trend day. But I don't think it makes a lot of sense to buy above seven. You get bad follow through on eight. A doji bar, which I think if you're buying with seven, you're kind of expecting to get bad follow through. You're hoping that you're going to get a big bull bar closing on its high, but you end up getting kind of a disappointing doji bar, which is somewhat expected. And then you get another an outside down bar on nine. It's a trading range bar. It's an expanding triangle. Outside bars are inherently expanding triangles on smaller time frames, but this obviously is no exception. So 9 is an expanding triangle. We're in breakout mode. If you bought above 7, you're probably disappointed enough in 9. I think a lot of traders are going to exit below 9. I still don't think it was all that great of an idea to buy above 7 anyways. It's probably a minor reversal at best. Follow through for the bears on 10. Maybe you could sell below 7 as it goes below 7, since there will be some weak bull stops there. I think it's kind of hard to sell 10 because it could be a second leg trap, right? 1, pullback, 2, and you're selling right on support, which is essentially the 1 low. You know that there are probably buyers below today's low. But the flip side of that argument would be if you were willing to sell 6, then you thought it was probably always in short. And if you thought it was probably always in short, then you still think it's probably always in short once you get 9 and 10. Right? Like if this, you don't think it's always in long because what in here tells you that the market is always in long? Nothing. So if you thought it was always in short on 6, it's probably still reasonable to be short below 10. So you could sell below 10, but I didn't. I just had a lot of trouble with taking that trade. Follow through on 11 for the bears is really strong, and it goes below yesterday's low and the 1 low. So you have a lot of traders who got trapped on bar 11. Traders who bought below 1 and the traders who bought below yesterday's low are all trapped now by this big bear bar on 11. It's a pretty climactic bar though. You had some smaller bars and then you have a massive breakout bar on 11. It's sell to close. It's a reasonable sell to close bar, but you probably are expecting to convert into the channel phase pretty quickly here or get some sort of trading range and bad follow through. You also have to keep in mind, if you look at the daily chart, what are you buying below, right? You're buying below, or what are you selling below? You're selling the breakout below this bar. Do you think the breakout below, this big bull bar is going to be super successful? Probably not. So I think while it was a reasonable sell to close, you have to keep in mind you're selling, when this support of this low is probably going to get tested. I mentioned on Friday, I thought that the bulls who bought above this or bought this close would be disappointed, and it's true. They were very disappointed with this gap down. And I think if we get back up to this close, there's going to end up being sellers. It's also right around 4,600. So generally I think 4,600 is going to be resistance over the next couple of days, at least. 11, essentially doji follow through for the bears who sold below, 12, doji follow through more or less for the bears who sold below 11. It's not all that great. It's 4 straight bear bars though. It is still sell to close. But again, probably going to pull back pretty soon here. 13 is an inside bear bar. Can you sell below 13? 13 is, probably a final flag. We might go a little sideways first, and then you can see we tried to get a breakout below the final flag, and the breakout failed. 15 inside bar, 16 inside bar. So you have an II after essentially a sell climax, and you try to get a breakout to the downside of the II, and you got a failure. I think at 17 is also trying to break out below the bear channel. You can see, this is the spike, and then this is the channel. So it's a spike and channel trend. Pretty much all trends are spike and channels, in some way. And I think 17 is trying to break out below the channel. And when you're trying to break out below a channel in a bear trend, especially later in a bear trend like this, it's probably not all that good. Only like a 25% chance that's going to be successful. And after the II final flag, you may be even a lower chance of success. Additionally, it's 3 pushes down, 1 pullback, 2 pullback, 3. So it's essentially a parabolic wedge. Inside bar on 18. Can you buy above 18? I don't think it closes strong enough to buy above 18. Bad, if you're what's the rush, right? You're looking for a good bull bar if you're going to buy here, and you're hoping for a swing up. Any parabolic wedges are usually minor reversals. So it stood to reason that 21 was probably going to be a minor reversal, a couple legs sideways to up. And then, bears would attempt to get some sort of second leg down. This is a pretty tight channel, so it's a breakout on a higher time frame, and it makes it more likely that we're going to get a second leg down. One of those leg one, leg two type of days. This might be a good example. Oh, this is a bigger example. One, pullback, two, things like that, because these are all you have to understand these are breakouts on higher time frames. Leg one, pullback, leg two, right? Because this is a tight bear channel, essentially a micro channel on a higher time frame. And it's the same thing here. If you look at like the 15-minute chart, the beginning of the day, you can even see the parabolic wedge here, right? One, pullback, two, pullback, three, inside bar. So while 17 might be a reasonable buy, it's probably a minor reversal. And you would expect some sellers at least at the one low. So I think I was somewhere in here, but bad follow through for the bulls at the bottom of 18 and on 19. A second leg up essentially for the bulls on 20, and we're probably gonna have to retest the apex of these inside bars since it's a triangle on a lower time frame. 21's a bull bar closing pretty much on its high. And the tail below 21 basically tested down. So you could argue that, you have a retest and you're getting the reversal up on 21, but 21 is still probably a minor reversal. I think we need, if we bounce, we're probably going to have to go more sideways here. That's one of the reasons you get bad follow through on 22 is because bulls aren't really willing to hold. And any bull who bought above 21 is probably a bit disappointed in 22. And so a lot of them are scalping out during 23. 24 is an inside bar. It's a good bull bar closing near its high. However, this whole thing was probably a minor reversal. You can argue that it's one, pullback, two, pullback, three. And I would agree with that. Or you could look at it as, this was the reversal up. So, you could argue it started here, one, pullback, two. And regardless, you're going to get bad follow through on 24, on 25. But I think 26 is an important bar. 25 didn't close on its low. And even if it did, this bull channel up is, notably tight. Usually, if you're going to get a second leg down, the channel up is not this tight. It, kind of drifts up and down and gets a lot more sideways. But this channel up for the bulls was pretty tight. And we had essentially a triangle forming here. And, essentially trying to get a breakout. So what's interesting about 26? Well, 26 is an inside bar in a tight bull channel. And essentially 25 was a wedge attempt from the bears. So if bears are trying to form a wedge and then we're getting 26 is about to try and break out above the wedge. So the bears argument is that we're going to essentially, go more sideways here and then they want their second leg down. The bull argument is that this channel is pretty tight and we're probably, or we might get a breakout to the upside. Definitely wouldn't say probably. I would say it's low probability buying above 26, but you might get a swing up. Kind of bad follow through on 27 and there's a big tail on the top. We were essentially retesting yesterday's low. That's probably one of the reasons for the sellers there, because the traders who's the traders who took the sell or took the buy below yesterday's low bought more lower, and they're getting out around break even. So initially, the breakout of the top of the wedge fails, and then you get good follow through on 28. It still has a tail on the top, and I think part of the reason is you're touching the one low, and those traders are getting out. But I still think 28 is a pretty reasonable buy the close bar. It's clearly always in long, and you're still on the buy above 21. And when it's clearly always in long, and you had a clear buy above 21 or 26, I think it's pretty reasonable to just buy the close. And 29, a big tail on top as well. I think you could buy the close at 29 too. It's kind of risky, but the logic is kind of similar. You could maybe buy above 29 even. It's probably not the best idea, but the logic being that essentially, what is this, right? There's a big tail on 27, a big tail on 28, and a big tail on 29. So what are those? Those are pullbacks. One, pullback, two, pullback, three. And if you look at a 1 minute chart, so we're going from 1140 to 1150. So 1140, one, pullback, two, pullback, three, to 1150. It's essentially a wedge, and you're trying to get a breakout above the wedge, and look where it led to. So here to the top of the wedge, and that was essentially the measured move that we went to. So although it doesn't look like it, 27 through 29 is a wedge attempt on a lower time frame, and 30 is a breakout above the wedge. So kind of like over here, this was, attempt at a wedge and we got a breakout above it. I think this is also an attempt at a wedge and we got another breakout above it. So you could probably buy the close of 32, hoping that the breakout above the wedge succeeds. However, the problem is you're getting pretty high in what's probably going to be a trading range. After this type pair channel, it's kind of unlikely that we're just going to rally straight up for the rest of the day. Pretty low chance of that. But there's a 90% chance we're going to break out of the 18 bar range. There's still a lot of time left in the day, so we don't have to do it now. We could do it later, which is what ended up happening. But I think it's okay to be long here. Doji follow through on 31. When you get a doji in a buy the close trend, it's usually going to start to go sideways pretty soon. Bad follow through on 32. Tail. This is a channel, right? So the market cycle kind of reset on 30. It's a spike, and then this is the channel phase here. And then the trading range 34, 35. I thought, inside bar 33, it's potentially reasonable to buy above, but you're hoping for a breakout above a bull channel, so it's a bit risky. Bad follow through on 34. And, a lot of times swings will do something to trap you out right before they go. So if you bought above 33, 34, traps out a lot of traders and you get disappointing follow through on 35. I don't think it's reasonable to sell below 34. Some traders will probably get out, especially the traders who bought low. If you bought down here, you have at least 2 to 1. Probably more. Yeah. And if you bought here, obviously you have way more than 2 to 1. So I think a lot of traders might exit below 34, but when you get disappointing follow through 35 and 36 starts to rally, the stops get run and traders are concerned that now we're going to break out to the upside of the 18 bar range. I think traders bought the close of 36 because it's reasonable so if you bought the close of 36, your stop's probably below 35, which would be the neckline of any sort of double top that would form. And one of the reasons 36 pulled back is so traders could buy it because now they have essentially look at one tick above the high of the day, right? If you buy the close of 36, your stop's here. It's technically a tick below there, but I find that measured moves are more precise if you just use the exact tail of the bar and not the stop. But whatever, use whatever you want. But I think it's okay to buy the close of 36 because now traders are getting essentially a potential swing profit up to this close. So if we race up there, they can essentially get a swing profit. And I think that's one of the reasons 37 started to race up because traders saw the value and they bought the close. And even if your stop, if you would argue that your stop is one tick below, which your stop is one tick below, but I've just found measurements to be more precise. We got a micro gap down. So, essentially the same thing at the high of the day. Good follow through on 37 for the bulls. Bull surprise, probably enough for a second leg. A lot of tails on these bars. So, it's kind of difficult to get long through a lot of this, but a lot of tails on these bars. 38 inside bar, 39 inside bar, II pattern after a buy climax. Probably not much left to this. And we get an III to 40. But, I don't want to sell any of this. This channel is too strong, and I don't really want to buy anything up here either. Bar 40, outside bar, just tight trading range, and you get a failed breakout above the III on 42. Bulls hoping that, essentially spike channel. Sorry. The market cycle is constantly, the market's constantly trying to reset itself, reset the market cycle, spike, channel, trading range, spike, channel, and essentially trading range. And 42 is a failed breakout and essentially a failed attempt to reset the market cycle. And then you get disappointing follow through for the bulls on 43. Makes traders think we might not be going to that high. And, 44 and 45, getting 3 straight bear closes, I think was important. I think bulls were hoping that, we were going to get another leg up and just basically get right to this high and then there would be sellers. But getting 3 straight bear bars, I think that disappointed a lot of traders. And the bulls who bought below 42 tried to get out on 44, not quite able. Tried to get out on 47 and again, touched the bottom, not quite able. And you get a big outside down bar on 47. Can you sell 47? Maybe. It's probably a second leg trap. You have 1, pull back 2. It's a big bar, but when you get a doji bar, that could be the start of trading range. Doji bars are trading ranges on lower time frames. So when you get a doji bar, it makes me think that this was the start of the trading range and that, this rally was just a leg in a trading range and we might just be getting a vacuum test back down here. So if you're selling here, you're selling against a really tight bull channel and you're selling kind of in an area where, we're probably going to start a trading range. Follow through on 48, but it's not that big. It's not big enough, and we had 3 straight bear bars here and it got bad follow through and you get a couple of straight bear bars here And then you get bad follow through on 49. Traders see 49. A lot of them buy back their shorts at the market on 50. It's notable that 50 didn't get back to the low of 46. I thought that it would, but it was not quite able to. So good for the bears. They have an open gap. Bear bar 51, but it's a low one, but it's essentially a third push down in what's probably going to form a trading range here. And we're headed, we're close to the open today, so we're around important magnets. 52, bad low too short. 53, again, a low too short and inside bar, but I would rather stay out. If you are selling, you're selling towards the top of the bear channel, which is what you want to be doing, rather than selling towards the bottom. So 54 triggers the low too short. Can you sell below 54? Maybe. I don't really know. Honestly, I wouldn't personally, because I think this is all just forming a trading range. But if you're selling, it's maybe an okay scalp. I think those traders got 2 to 1 of their true risk about there. And you can see 55 essentially tried to get back to the 53 low. Traders who sold below 53 or bought below 53, disappointed in 54, trying to get out during 55. So a lot of bulls selling, causing 55. Can you sell below 55? Well, you're selling the bottom of a bear channel, so that's not good. You're selling right at the open of the day during a trading range day, so that's not good. And look what happened here. We had good pair of bear bars, bad follow through. So what do you think is going to happen when we get this good pair of bear bars down to the bottom of the channel again? Probably bad follow through. And you can see that's exactly what happened on 56. So you get 54, 55, bad follow through 56, traders buying back shorts at the market, causing 57, disappointed in 56, where they're not going to be able to get out at break even. Can you buy at 57? I don't think so. You're essentially retesting the apex of this triangle and, essentially this tight trading range. And 57 doesn't close on its high, which is disappointing. So I think that kind of like over here, where traders are more interested in buying a pullback, I think traders are going to be a lot more interested in buying towards the low of 57 than towards the high. Disappointing follow through on 58, potentially a bull trap. It was a trend line break of the bear channel. So we might get a pullback and then a reversal. But can you sell below 58? Maybe. I thought that the bears who sold below 55 did a reasonable thing, and they might get a chance to get out. Maybe 60% chance they're going to be able to get out at break even. So I thought we might try and race down there. But if you sell below 58, you're probably pretty disappointed in 59 pretty quickly. And a lot of those traders are getting out, and then that's why you're getting a doji bar. Outside bar on 61, I think what's happening here is any bull who bought above 57, they didn't really have a chance. He could have gotten out around the close, but it didn't clearly have a chance to get out at break even. And then 61 touches their entry price, and so those traders sell. It's a tight trading range. So for the bulls, they're hoping for another leg up here, but they're disappointed. The bears are hoping this is essentially a breakout pullback, but I don't think anyone has a super credible argument right now. I think it's a tight trading range. 62, big tail on the top. Lots of tails on these bars. I think we're going to go sideways. Bull bar on 63, but it didn't break out above 62. And we've essentially been in a tight trading range since 48. And so you're buying 15 bars into a tight trading range, and you're buying at the top of the tight trading range. So I don't think that's a very good idea to be buying above 63. Disappointing follow through on 64. And then an inside bar on 65. Can you sell 65? You're selling right on the moving average. It's 3 pushes up. Bulls are hoping essentially you're going to get a failed breakout and then a reversal up and a breakout above the wedge. And bears are hoping, you're going to break out below the wedge and get a measure move down. 66, kind of disappointing follow through. You wanted, a bigger bar. Then you get 67. It's a micro double top, and you're hoping to get a breakout down and a measure move below the wedge. There's still time in the day for that. But you have problems like the open of the day and the bottom of the trading range. And that the bears who sold below here, if we get back here, they're probably going to get out. So I don't think it's all that great to sell below 67. I think it'd be better to just wait for follow through. And if you get a big follow through bar, you can sell that. And you get disappointing follow through 68. Traders exit during 69. You got to be quick to get out. 70, a reversal up. But, I'd rather wait. If we get a good bull bar on 71, why not just buy that instead? Makes more sense. And you get disappointment on 71. The second reversal up on 72. But I still, I think I talked about that earlier. I still think you're buying in a tight trading range, which really just in general is not a good idea. I thought stop orders were kind of, I guess a bit difficult today. Maybe I'm just bad at trading. I don't know. But you can maybe buy above 1, but you probably got to get out somewhere up here. you can't just sit here and take a full loss. Um, can you sell 6? Maybe, but I think you're probably going to have to sit through, a pretty tough pullback if you take that sell. You might be able to sell 10, but it's just difficult. I think, with, how strong this bull bar is, there's probably going to be buyers here. So I think it's kind of hard to want to sell 10, but I think it's probably valid. You can maybe sell close of 11, but this is kind of tough. I think you probably buy above 21, but it's probably going to be a minor reversal. So I think it's just difficult to buy above 21. I suppose you could do it on the premise that the bulls who bought below 1 are going to get out at break even. So it's maybe a reasonable thing to do, but I just think it's a swing buy. It's a 40% swing, right? I think, maybe buy above 26, but 21 is probably better. You can buy this close, I think, or a lot of these closes really. That's really it. That's all I would do for stop order trading. I don't talk as much about limit order trading. I try to notice where limit order traders are making money, but I never trade on limit orders, so I don't really know exactly how valid a lot of the setups are. Like, there are theoretically limit orders on every single bar, and so I try to pay a lot of attention. Well, if you sold above 1, you're able to scale in and make money, but I'm not going to sell above 1. So it's one of those things. Always in was kind of difficult with, by the time it became clearly always in short, there wasn't much left to the move. And, same thing with by the time it clearly becomes always in long. So I assume it kind of became always in long, especially on the close of 28, but this just wasn't a very clear day, which is pretty common in trading ranges. For tomorrow, it's essentially another high 1, or you could argue high 2. It's a pullback in a trading range. I think, we're probably going to oscillate around the middle. We're in the middle of the tight trading range right now. So breakouts above are probably going to fail. Probably sellers above, probably buyers below. Maybe we get to 4,600 and try to test this close so traders can flatten. And on the weekly chart, bears really want a bear close. This pullback, the gap down is a good thing for them. Essentially, we were testing this close and we found sellers, which is not surprising since if you got this close, you'd be very disappointed in all this. But just expecting a lot of sideways trading this week. And